Welcome, dear traders. The Asia-Pacific region showed subdued trading at the beginning of the week, following the mixed statements made by the Federal Reserve last Friday and the Bank of Japan's upcoming decision. Markets may prefer to wait for more economic data. The Bank of Japan's decision will be announced tomorrow. The regulator is unlikely to make any dramatic changes to its ultra-loose monetary policy, since the statistics have not yet recorded a significant increase in wages in the country. In particular, the agreement with Japan's major labor unions to raise wages is scheduled for next year. And this year, the head of the Bank of Japan has repeatedly raised the issue of possible hawkish changes in monetary policy, and this move is almost revolutionary after several decades of ultra-soft so-called Abenomics. Meanwhile, the country's wage levels have remained unchanged for about 30 years. As a result, markets are still taking a cautious approach in case the Bank of Japan does come up with a surprise. Expectations that the country's central bank would signal an end to ultra-loose policy kept the yen steady around 142.30. As you can see, the dollar-yen pair is still not far from its highest level since late July, which was reached last week. However, moderate risk sentiment is undermining its safe haven status. In addition, the US dollar is also attempting to rise from its ferment lows, reaching on a Friday. Therefore, the pair began the Asian session under pressure from the greenback, consolidating in the 142.00 and 142.5 range. The dollar-yen pair may move to 142.80 and reach 143 points if bulls push the price higher. On the other hand, the supported 142 yen may protect the pair from a quick plunge to the critical 140 mark. In addition, today's news from China was another major factor that undermined the safe haven yen. At the beginning of the new week, markets received a forecast from China's Central Finance Office. The country's authorities agreed on efforts to stimulate domestic demand to revive and boost economic growth. To this end, a program of fiscal and monetary measures was adopted. Although the Chinese Central Bank's key interest rate meeting is scheduled for Wednesday, and the yuan traded higher early Monday. The Chinese yuan, as well as the US dollar's peers in its currency basket, continued to benefit from the US dollar's sharp decline. Following Jerome Powell's dovish comments, the US dollar index plummeted. On a Wednesday, after the head of the US Federal Reserve admitted the possibility of as many as 3 interest rate cuts in 2024, and the following speakers cooled down these hot forecasts. Atlanta Fed President Raphael Bostic believes that rate cuts are only possible in the third quarter of 2024. New York Fed President John Williams said that the regulator was not discussing any changes in its policy, and the Fed aims to keep inflation within a 2% target. At the same time, Austan Goolsbee of the Chicago Fed did not rule out the possibility of a rate cut as early as next March. In the wake of Friday's speeches by several Federal Reserve policymakers, investors and analysts had many theories to explain the shift in sentiment. At most so, it's as an attempt to cool interest rate expectations, as well as an opportunity to prevent overly sharp asset moves. However, Treasury yields and the US dollar are likely to remain lower in the near term as the markets become increasingly confident that Fed policy will ease over the next 12 months. As a result, after rising to the 102.50 level on a Friday on the back of a hawkish comments from Raphael, Bostic and John Williams, the US dollar plunged at the beginning of the week. The US dollar traded within a narrow range of 102.30 and 102.60, maintaining bearish momentum. There are no major publications on the US economy today. In the European Union, member of the Executive Board of the European Central Bank, Isabel Schnabel, is scheduled to speak. Notably, the policymaker is known for her hawkish views, and her comments may support the euro, which has a 57% weight in the US dollar basket. In this connection, the US dollar index risks to test the support level of 102 today. The Antipodean currencies found several reasons for strengthening at the beginning of the week. The optimistic forecast for the Chinese economy were joined by hopes for increased supplies of Australian products to the market of its main trading partner. The Aussie was also boosted by the rise in oil prices and increased interest in risky assets. The Aussie also found support from a strong domestic economic data, and recent reports showed that the country's labor market is robust and that business activity is growing in both the manufacturing and services sectors. On the back of the strong economy, the Aussie climbed above 0.672 today. In a Monday's Asian session, the Aussie dollar pair was trading within the range of 0.6690 and 0.6730. Another scenario supports bullish momentum and a move toward the resistance of a 0.6790. The next support for the pair is located at 0.6670. On a Monday, the Kiwi dollar pair was trading within the boundaries of a 0.6190 and 0.6250. Maintaining bullish momentum. Meanwhile, the pair may continue its upward momentum today. As you can see, the Kiwi managed to advance to 0.6240. If the greenback continues to retreat, the Kiwi may test the key technical resistance at a 0.6270. And today, the New Zealand currency may also slide to the area of a technical support at a 0.6059. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you online soon.